Welcome to the Mind of Business Success podcast. I'm your host, Alicia Kramer. Our guest today is John Briggs, and we're going to talk about your money and your taxes. And before anybody clicks off and they're like, oh man, I don't want to talk about taxes. This is a good conversation because you help people save money on their taxes. And who doesn't want to save money on their taxes?
Totally. We actually, I'll tell people like, look, I know it's not the sexiest topic, but what you get to do with the good results is really sexy.
Everybody wants more money. And most people are looking at it from the perspective of how do I make more money? But if you can save more of the money that you are making, that's huge. It's crazy to me how many times I'll hear in different conversations, these business owners, it's especially common in the online space, who are spending millions of dollars on advertising. And they're promoting themselves as like super successful. Oh, look at all this money that we make. And then when you actually like look at the profit, it's not so sexy.
Oh man. It's so I'm sure everyone's familiar with the Inc. 500 list, right? Fastest growing companies. And it's so popular now. They have it fastest growing in this city, in this state, and nation, and all that stuff. Out of college, I was a controller for a door-to-door sales company, and they were 117th on the list one year, and then the next year they were like 88th. The year they were 88th fastest growing company in the world, they did almost $30 million in revenue. They declared bankruptcy the same year, and the company no longer exists.
That is a scary fact, and one that I don't think a lot of people talk about.
It's not sexy though, right? Like, how do I get more sales? How do I get more clients? Like, oh, that's exciting. That, I get that. But sometimes we have to do the unexciting things. And maybe it's our job to get excited about some of those things so that we focus on the cash outflow as well. Because if we don't pay attention, as our income increases, our expenses usually increase at the same pace, if not faster than the rate at which our income is increasing. So yeah, like what you're saying is we can grow our wealth sometimes simply by just looking at the saving component of managing money as opposed to just getting the money to manage in the first place.
Let's talk a little bit about your business and what you guys do, just so our audience has a frame of reference for where you come from and what your area of expertise is.
Yeah, sure. So our company is Insight Tax, and it's spelled a little bit different than probably what you're thinking. It's Insight as in to incite a riot is usually how that word is used in a sentence. We think the government sucks at spending your money. So we wanted to use an aggressive word, but it actually means to cause to action. So we try to help our clients grow their wealth by helping them take action with managing their finances. We do a lot of tax preparation and tax consulting because for most of us, our tax bills that we pay over the course of our lifetime will be our single, other than maybe our home, our single largest expense. And so if we can reduce that for somebody, that's more money in their pocket. We also help them manage their cash flow so that their business can stay healthy. Because ultimately, if we can help them do that, then they can carry their passion out and try to leave a long-lasting legacy and footprint on their own community. Because most people don't start their business to be excellent at filing taxes or necessarily like putting in a cash flow system, right? So we're happy to support them with their passion. And we found that, gosh, the world's a better place when business owners keep more of their money.
There are a lot of people who are terrified of the IRS. I laugh, but it doesn't feel so funny when you're in it. And is one thing to begrudgingly pay your quarterly taxes. And it's another thing to be terrified of repercussions because of your tax obligations that you may not be fulfilling, or you maybe don't have all your ducks in a row. And you don't know, what happens if they come in and they decide to audit me? Am I paying more in taxes than I should? What about those businesses that are looking at their quarterly tax bill and saying, I don't have the cash flow for this? I mean, these are all real things that, like you said, they're not sexy, but if you don't address them, it can create so much stress, so much fear, so much anxiety, stress on your business, stress on your personal life, stress on your family. So let's talk about that. From your perspective, what are you seeing?
Well, so with what you just said, two things come to mind. First, a mindset comment, and then a tip for everybody. So I see that as well. People are terrified of the IRS. I want them to change that into, I should be terrified that I'm paying more in taxes than I should be. Ultimately, the IRS is nothing more than a very large schoolyard bully. A lot of people don't realize this, but most people who work for the IRS were turned down by credible companies. And, they found that at a last ditch. They don't even have to understand the tax code to work for the IRS. They're trained on the procedures the IRS tells them to do. We constantly find ourselves in conversations and more like lectures and teaching moments with the auditor, explaining them how the tax code works that they're trying to enforce. A lot of CPAs get to the point where you feel like they're working for the government. They're unwilling to do that work because it's not necessarily the greatest thing, knowing that I'm effectively talking back to the principal, knowing they could, like, if they're really mad at me, make my life a living hell, even though most of them do see logic once we point it out to them and explain, like, well, here are all your rules and what the court said, because they're the ones who interpret the rules, not you. Anyway, so it doesn't solve your problem if you're terrified for me to say you shouldn't be. But I'm telling you from someone who's been doing this for, almost 2 decades, they're not as terrifying as you think they are. And for most people, unless you're Wesley Snipes, who tried to argue he didn't have to pay taxes, so he went to jail for a few years. Most people, and probably 100% of your listeners, the worst case that happens is they end up saying you owe them more money, and then you have to pay them that. But they're not doing a lot of, they're not throwing you in jail. Okay. You can most of the time still grow your business. Now, again, there are some extreme scenarios where having a professional helps. So that's a mindset. I want people to be more terrified about overpaying in taxes than I do of them just of the IRS. The other thing you said, the quarterly taxes, and for some, they don't make the quarterly taxes, so they just pay the income tax at the end of the year. Because quarterly tax is really a prepayment. What do you do if you don't have the money? So when we talked about cash flow, one of the components of our cash flow system is that we recommend taking a percentage that, with the help of a professional, you can probably calculate pretty easily or do it on your own. How much tax, like what's your tax amount that you owe every year compared to your income? So I'm not saying what tax bracket am I in, because that's not sexy and that's hard to figure out. And if you're not a tax person, like, oh, married filing jointly and all these different, I'm single, I'm a head of household. Don't worry about all those stupid details. You don't need to know about that. But you can look on your tax return and say, I owed this much in taxes, and then I made this much money. Just divide it, right? So if I had made $100,000 and I owed, say, $9,000 in taxes, 9% of my income is for taxes. So 9% being my number in this example, once a week or twice a month, I'm going to set aside 9% of the cash that was deposited into my business into a separate account hold for my taxes. That way, when you get to the end of the year, you have it. And by setting it aside in much smaller chunks, you actually will be able to still run your business the way you normally do, because you don't feel as big of a hit, right? If I'm setting aside $300 every time versus I got to come up with $9,000, those are two different scenarios. And especially from mindset standpoint, that can do a lot on your psyche. $300, not bad. $9,000, the world's ending, you know? So I don't know if that answered your question, but I wanted to share that.
It's a good tip. Now, what about for our business owners who they already have the bookkeeper and the CPA, and they're thinking to themselves, am I overpaying on taxes? What do we do for those people?
Well, clearly I'm biased, but if they're not using our firm, my guess is they're overpaying in taxes, but that doesn't always help everybody. So I think it doesn't hurt to have a conversation with them and say, are there any new tax changes that have happened? Based on what you've seen in mine, is there anything I'm not taking advantage of? Google has so much information nowadays, even a quick search of like, what are obvious tax strategies to use for fill in the blank, whoever I'm in my situation. You might get some articles that at least trigger you to then ask your CPA, hey, I heard about this 401k profit sharing thing. I know I'm doing a 401k. Am I doing the profit sharing thing? Sounds like I can be putting away a lot more money. Because the thing is, my guess is if you've been using your CPA for more than 1 year, they've exhausted their ability to help you lower your taxes. They've shared everything with you. They should have shared everything with you when you started the relationship. So there are lots of strategies out there, and there's really no way for you to necessarily know without being a tax expert if you're getting all the advice. I for sure want to share at least one strategy with everybody that we love that for some reason a lot of CPAs don't use. And then the other thing I'd say, you said bookkeeper and CPA. I think it's important to note the difference between the two, right? I would not be relying on my bookkeeper for tax advice. If you hired a bookkeeper and they also happen to file your taxes, you likely are overpaying. In general, most bookkeepers in the world are really good at learning the software, and they don't necessarily even understand the accounting rules, and therefore can kind of screw up your books, and which leads to you getting not great reports, even when you look at the reports, because hopefully if you're in business, you're looking at your financials to make decisions. Please, for the love. The purpose of doing bookkeeping is not so you can file your tax return. You have to do that, but doing your book so you can understand your business, that's important. Anyway, so yeah, there's a distinction between bookkeeper and a CPA. Just make sure you're having the right person do the right service.
Okay, so I know that there are some people who are doing it themselves that are listening. I know that there are people who do have just a bookkeeper. I know that there are going to be people who have the bookkeeper who keeps everything orderly, and then that goes off to the CPA. So we've got people all over the place. Now, I think it's important to just get really clear on the fact that there probably are things that every one of these different scenarios could do to be saving themselves some money. So let's talk a little bit about what you guys do that other companies, other CPAs are not doing.
Okay. So yeah, whether you're in any of those scenarios you just described, mindset is actually a super important aspect of saving money. And what I mean by that is we often get the question, well, what can I write off? What's a tax deduction? Because it doesn't matter what scenario you're in, all of you are spending money on business expenses. So you all have possible tax deductions. We often find that because of the conservative nature of being detail oriented, a lot of CPAs, again, they're beyond conservative part where I don't feel like they're serving their clients anymore. So we say this because the tax code tells us you can write off anything that is ordinary or necessary. Those are the two words in the tax code. And most of us, well, at the time when they first wrote it, CPAs were like, I don't even know what the heck that means. Ordinary and necessary, like everything's necessary, or I wouldn't have spent the money. And they're like, well, you can't write that off. Well, it was necessary. Well, it's not necessary to us. All right, then what's your definition of necessary? So they, quote unquote, helped us by adding more words to the tax code to say, well, we mean, is it helpful and appropriate? Oh my gosh, you guys, you're killing us. I don't understand what you mean. So the way we look at understanding what can I write off as a business owner, is it related to my business? If it is, you can write it off in any form, shape, or fashion. So most people are aware of the obvious expenses that they're spending. I clearly bought that software for my business. I'm clearly claiming these miles because I'm driving to business. But what about, well, I had to do a few repairs. So I went to Home Depot and bought some stuff. Okay, those miles count. I had a company party. I needed to buy some groceries. Well, your drive to the grocery store, then that's a write-off. So like even that mindset alone, can I tell myself or give a logical argument to the IRS that says this was related to my business? Then you should feel comfortable writing it off. Now, that being said, you're not a tax code expert and you should never expect yourself to be. Just to play it out for you, let's say you end up getting audited and they're like, what's this expense? Well, it's related to my business in this way. If you can give like your rational reason as to why you claimed it, all they're going to do is say, well, based on the rules, you can't actually take that. And then you end up paying a little bit more in taxes. That's worst case scenario. Now, if you're claiming something and you're like, I don't know how I could say that's related to my business. I mean, we had a client, he gave presentations and he bought $100,000 belt buckle. The one belt buckle was $100,000. Now, look, if you have that type of money and you want to buy that, I think that's awesome. Good for you. There's no way you should ever try to write that off because you can't argue that to this IRS.
That's not ordinary and that's not necessary.
Right. Right. Maybe helpful, but maybe not appropriate. So there's obviously a line there. It's like, I don't know how to justify the $100,000 belt buckle when I gave presentations.
Now, if he had his logo imprinted on it,
technically he could still write it off, but the IRS is going to definitely, like in an audit situation, they're going to disallow that, even with the logo. It's like, okay, because anytime like collector items, things that are really expensive, they try to put them in this different category that a lot of people don't realize there's exceptions and things. But that's just an example. So again, as long as you can come up with a rational story as to why it's related to your business, then you should be claiming it, which means you should be paying for it out of your business account, which I'll even add further, which means you need a business account for your business. If you're in business, you have to have a separate account. Don't use your personal account. We even recommend, you don't necessarily have to have the credit card in your business name, but we do recommend having a separate card that you use just for business expenses. In the audit scenarios we've dealt with, it is always cleaner. We get less like attacking auditors if we can show, look, this guy is serious about business. He's got separate bank accounts, separate credit card he uses. But again, that mindset for a lot of people. So when we share that with new clients, we say, go back through your statements, make sure you've captured everything that's a possible write-off. One of the first things we do when we bring on a new client is we'll go through their books. And a lot of bookkeepers who are bookkeepers and don't know the tax code will, like, let's say you went to Starbucks and got coffee. Okay, well, they don't necessarily know if that was with someone or not with someone, or if you bought it on the way to a meeting, right? A lot of them will just automatically claim that as, well, that's just owner distribution, not a meal expense. Well, there's lots of reasons why that could be a meal expense. Some simple stuff like that, sometimes, you bought, looks like you went to the state liquor store and bought alcohol. I'm going to put that under owner distribution. You don't know, maybe they had a business party and they wanted to provide alcohol for that. So there's lots of times when maybe the bookkeeper just trying to be helpful, not knowing the rules, is not claiming the full amount of deductions that are even showing up. So we always recommend a review of the statements once you realize I could probably be writing off a lot more stuff.
Now, for those individuals who have not been keeping very good records, when's a good time to start?
a great time to start is yesterday. Yeah, look, so the IRS has 2.5 years to select you for audit. If they do select you, they could open up past years if they wanted. So if you didn't have good record keeping and the time has passed, you just move on. There's nothing, I wouldn't spend any effort on it. But 2022, if you haven't kept good records, I think January 1st, 2022, you could set that as a date. Like, I'm going to make sure I keep good records as of this day. Usually also, just to follow up on that, sometimes we'll get asked the question, well, do I really need to keep my receipts? Your bank statements and your credit card statements is a form of receipts. So if it says Chevron X, like $80, because that's what gas is at these days, that Chevron, that's very likely related to automobile expense, right? The IRS is going to say, okay, I approve it. If you, Walmart, Amazon, those types of places where you could buy a bunch of stuff, yeah, you really do need the receipt or they will disallow it. Unfortunately, it's our job to prove our expenses. We are guilty until proven innocent in the tax world. Now, I'll tell you how I file my receipts so that maybe this helps business owners. I get the receipt, I put it in my pocket. When I go home, I have a place on my desk. I then put my receipt there. And when that spot on my desk gets clustered, I shove all those receipts into a big envelope and I write the tax year on it. That is my filing system for my receipts. So if I'm ever audited, I'm going to hand them that envelope, be like, here you go. Here are my receipts. I kept them. Exactly.
Awesome. All right. Well, I think there have been a few really good takeaways here. And I want to shift gears a little bit because I want to talk to you as the business owner. And one of the questions that I ask all of my guests is about your own mindset and your own mindset journey as a business owner. Now, we've all got a ton of stuff that we've had to work through, and it's an ongoing journey. But I'd love it if you'd be willing to share with us maybe just one thing with your own mindset that you had to overcome in order to get to where you are today.
So I can tell you, I am a full believer that the level of the success we currently have is tapped and capped based on our current mindset. There was a time, so starting about 3 years ago, I hired a business psychologist. And I remember being in this, the lady I used, she gave a presentation at an event that I was, and she was just talking. I'm like, oh my gosh, I totally need to understand that about myself. Because I didn't even realize at that time that there are things I was doing that was damaging to the way I was growing my company. And it was completely in my subconscious. So I hired her, and we've had sessions one off. Over the course of 3 years, it's been really awesome. one of the first things she helped me understand, because I still am still working on it, but I was way worse as far as like people pleasing. I did not want people to not like me, like, which is a really difficult position to put yourself in if you're the owner of a company and you have team members, especially when those team members are not doing a good job. And you have to tell them you're not doing a good job, but I want them to like me. Like, so I found that before being, I'll tell you how she helped me uncover it, but before uncovering this, I would give passive aggressive comments, my direction on my, like, I'm disappointed in you. The way I would word that with them was so unclear. There's no way I was giving them the resources to be successful. So it's really, on one hand, disrespectful to them by holding back. Now, certainly I'm not talking about being a complete jackwad when you're telling someone they need to be better, but there's good ways and bad ways to deliver it. So I was telling her how, like, yeah, I'm struggling with this team member and I don't know what else to do. And she's like, well, tell me about the time when you were bullied as a child. I'm like, what are you talking about? We're talking about Eric and how he's not very good right now. Like, okay, but your people pleasing is coming from a place because you likely were bullied when you were a child. So I'm just curious if that's true. And so I'm like, yeah, I totally was. I was short. I was fat. I was, for religious beliefs on our street, like I was kind of picked on for a variety of reasons. And when you're bullied, you find that the way to be safest is to try to be as invisible as possible. And so if everyone likes me and I'm invisible, then there's less chance for me to have that pain in my life and I won't be bullied. And that carried with me from a child to being an adult business owner. That whole thing is now carrying me and causing me problems because my team isn't improving the way I want to, because I freaking was failing at telling them how they directly, like, how do you need to improve and the areas that you aren't doing good at. So because she helped uncover that, in the past 3 years, I mean, we have added more than a few $1 million of revenue to our company, which is because our team members now have a lot better direction. They get more consistent feedback, not even necessarily critiques, helpful observations on how they can do better. And by when they do better, we do better. So that for me over the last 3 years has probably been the biggest mindset shift that I've had as a business owner.
Thank you for sharing that. That's why I always say we've got to do the inner work. And there are a lot of business owners who are still operating with sort of the old paradigm. It's all about hustle and grind and just working as hard as possible, long and hard, and, kind of beating your people into submission, not literally, of course, but, and when I'm working with my clients, it's always coming back to, what's going on within you here? Because there's always a pattern and there's always some work that we need to do within ourselves. And until we clean up our inner stuff, we're going to continue to create these same types of patterns over and over and over and over again. Our results are a direct reflection of what our beliefs and expectations are. And all of that old stuff that's in our subconscious mind. And most of that we didn't choose. So when people are feeling ashamed of whatever their stuff is, I always reinforce the truth. You didn't choose it. You just had some really shitty conditioning growing up, but you have the ability to change it.
Right. Yeah. We may not have chosen the experiences from our past, but we certainly can choose our future. And one of the things I love about your listeners, the fact that they're listening to you, means that they've accepted that what they're experiencing right now is based on who they are and what they're doing. There are lots of people in the world who would have taken offense to that statement just because they're happier and more comfortable in the victim mentality. And there's no power or control you give over your life when you take on that mindset. So I love that they're empowered to understand, like, yeah, this is where I'm at. And it's not something we have to beat ourselves up about. It is what it is. It is what it is. It is like, there it is. Great. Now I can choose, what am I going to do with what it is?
It's almost like you're sitting in my spot. I say that all the time. It is what it is. Where are we going to go from here? And 100% responsibility is one of the fundamental mindsets that we have to embrace if we want to change our life. Doesn't mean that we're saying it's okay that someone wronged us. It's not okay if your parents beat the crap out of you. It's not okay. But now you have to be responsible for who you are going to be from this moment forward.
I love that.
All right, John, let's talk about how our listeners can connect with you, because what you guys are doing is so truly valuable. I want to make sure that anyone who's listening who is like, I need to do this right. I know I don't have my ducks in a row. I want to work with a real professional here. How can our listeners get in contact with you?
So through our website's really great, but to bring it full circle, we started with, growing your income is really great, but savings is important. So one of the things that we do with our clients who sign up for the cash flow management stuff is we will review their expenses with them. So we've created a handout of 9 questions you can ask about every single expense. Yes, does that seem aggressive and intense? It is. But if you answer those 9 questions about the expense, you then quickly realize, was this beneficial for my business? Was it productive or was it not productive? And so then we help a lot of business owners then realize, wow, I got a lot of expenses that I can save that money without even having to add more clients. I just increased my profitability. So if they go to our website, insighttax.com, and again, that's the aggressive insight. So INCITETAX.com/wealth. There's that free handout and a couple other free handouts. But that's, our website in general, we try to be as direct and to the point as possible with our blog posts. We have a bunch of strategies that we just share in the blog post, the same stuff that people pay for. You can DIY your own strategy if you want, paying your kids, the Augusta rule, corporate rent. There's a lot of stuff that your listeners can save money on. So check out the blog, check us out on Insight Tax, but that's the best way to get in our ecosystem.
Perfect. I want to thank you so much, John, for being with us, for sharing so openly and honestly about not only taxes and what you need to do about your money situation, but also just being raw and real about your own personal mindset journey. So thank you so much.
Thank you for having me.
And thank you to all of our listeners. We are doing this for you. If you have not already subscribed, please make sure you do so. And until next time, we will see you in the next episode.